Chair Warsh has argued artificial intelligence will reduce inflationary pressures. It's a similar argument that we've heard in the past, notably from Alan Greenspan. But on Economic Voices on AI, former Fed Chair Janet Yellen and top Head of Economic Advisor Jared Bernstein wrote in May that Warsh is wrong. They argue through higher investment and wealth effects, the AI boom will raise demand and cause higher prices. Meanwhile, the former World Bank President David Malpass wrote in the Journal that this view is inaccurate and Warsh is on the right track. David Malpass is with me now. He's the Vice Chair of American Global Strategies, and it's always good to see you, Mr. President, former head. Look, we're moving into a really fascinating time for, if you like, Fed geeks like me, in the sense that the battle is no longer something as blunt. Raise rates, don't raise rates, do this, don't do that. Now we're really talking about the shift in monetary policy in its widest sense.
Hi, Richard. Yes, there's a lot at stake. One of the things in the statement was the continuation of ample reserves. So that's a core policy of the Fed, but only in recent years. So as they think about the size of the balance sheet, as they think about the inflation framework, which is one of the task forces, they'll be thinking about whether these mechanisms are the right ones for our current time. I like that the chairman was talking about the dynamism of the economy now, and how there was some implication that the Fed hasn't kept up with the pace of change of the economy. I think that's really important to keep in mind.
A lot of the arguments that he is advancing are well rehearsed and well known. They've been, if not rejected, at least not adopted by policymakers. So the fact that he is putting them on the table to a Fed that has already considered them, is he going to have a battle to get some of these ideas through?
I'm sure there will be changes. Anytime you're trying to make changes, there are battles, and he calls it a family fight, which I think is a great phrase. But what you saw was a unanimous decision. So that's a good starting point for the Fed. Then the question is, are the task forces able to make recommendations and move quickly enough to get changes? The world is going so fast now, with productivity changes, with new science, with new ways to price things. You know, I'm worried that the concept of annual inflation is not really the right framework, but they'll have a task force and they'll think about it.
But they have to get inflation down to target. Their credibility is on the line. If they don't use the policy rate, is it just a wing and a prayer? I mean, the oil price shock may not pass through into second factor effects, but how else are you going to get it down to 2%, or have you abandoned the target?
Richard, you know I'm a bit of a skeptic on whether high interest rates causes inflation to go down. I think it puts the burden on small businesses, and you get less investment, and it doesn't bring it down. That's what we saw in the Biden administration. They had the rates high, and the inflation rate didn't, or they were raising the rates thinking it would work, and it didn't work. But already you see former Secretary Yellen and Jared Bernstein saying that that's the wrong way to think about it, that you have to go directly at the demand in the economy. So I think that's this core issue of, are we thinking that the economy is dynamic from the supply side, or are we, in my mind, they're looking backward, that we've always talked about demand in the past, and that's what we want to do now.
Do you believe that the inflation we're seeing, I hesitate to use the word transitory, but it is oil related? Now there is a peace agreement, that inflation is likely to abate, if not completely, but sufficiently.
I think it depends some on the production of the economy, not just the U.S. economy, but the global economy. So I think supply and demand are dynamic, and if you can create a better world, then inflation can come down more quickly. The Fed put out their forecast today, so one thing, a couple notable points, the growth rate is pretty low, not only this year, but next year for the U.S., right. And the inflation rate only comes down gradually a little bit. And so I think that the economy can do much better than what's in those forecasts.
David, one last question, completely unrelated. Assuming you're flying from New York to Sydney, Australia, would you prefer to go non-stop, or would you prefer to stop on the way?
Richard, I'm a non-stop. I like to get it done. I don't like going to distant meetings, especially if it's going to be a conference where people just talk and talk and talk. So I'd rather get it over with.
Thank you, David. Thank you very much. I have the plane for you right behind me. Here, David Malpass joining me. Coming up.